Welcome to this week's Q&A. We've got a great question from one of our viewers in Sydney this week, and his question is, how can I use all of the tax benefits most efficiently to help me when I'm buying an investment property? I've heard lots of different stories and pieces of information, but I don't fully understand those. In particular, I'm not really sure how I utilise the tax depreciation, Division 40 and Division 43 deductions that my friends tell me about. So look, this is a situation that potentially requires some more specific information and advice in relation to someone's own personal situation, because it depends to some extent on the tax rate that you're paying, so on the income that you're earning, on other deductions that you may or may not have at your disposal. Lots of different things we need to look at. So it's a great question, but it can't really be answered generically apart from, I suppose, underlining the benefits that most people should be able to use. And that is that they can claim deductions for allowable expenses that are incurred in producing the income from this investment, but then they can get these non-cash deductions. And these days, when we're seeing new properties that are being built with very high quality finishes and inclusions, some of those deductions become very sizable. So if you think you can deduct 2.5% of the building cost each year for 40 years, now you're not spending that each year. And if something has cost, let's say, $1 million to build, that's $25,000 per annum. Then on top of that, if you get the deductions or depreciation allowances on your fixtures and fittings and allowable chattels, that could easily be, twice that amount again on high quality properties. So we're not talking about an insignificant amount of deductions. It's actually quite meaningful. And the other thing, of course, that generally happens with those properties is that you're going to get potentially a higher rental yield, because people like to like to live in a better quality apartment or home. So those things are all things that you need to consider, and that's why I'm saying it's really probably far better to seek individual advice or information around that from either your tax professional, accountant, or other advisor. And certainly we can give some information to people in relation to these matters. So if that's of interest to you, then please don't hesitate to reach out, email us or call us, and we'll have somebody contact you. And if this interests you, then please subscribe to our YouTube channel and click like, and I'll see you at next week's Q&A. I'm Andrew Unterweger.